Welcome back to another weekly review. In this one, I will be covering the NQ in the week of November 10th, 2023. In this week, I decided to look for trades using the news events of the week as a roadmap to navigate volatility in the market. In hindsight, it was a bit interesting week, but I will dissect price action through my eyes in this study/weekly review. Heading into this week, I was mainly looking for an AMDX profile in terms of quarterly theory, as Monday had no news and wanted to see Tuesday or Wednesday create the low of the week during the high impact news events. As this was the first quarter of November, I was expecting either consolidation this week or a continuation into October's highs, as the higher time frame objective had been mentioned in last week's review, which was that previous month, and the weekly discount array. In terms of seasonality, I wasn't too interested in DXY's correlation right now, as the beginning of DXY in November seems to be consolidation on the seasonality chart. So here you can see it's kind of consolidating. Another big thing is that when I was looking at DXY's price chart, it was moving in sync with the indices, and that indicates that one of the two markets are being manipulated. So in that sense, I just disregarded the XY and traded indices based on what I saw between the three of NQ, ES, and YM. One thing I want to note that I didn't see last week is that we completed a massive monthly market maker sell model on the treasury bonds. This would be a massive correlation to why price has been extremely bullish for the past 2 weeks in indices. Once again, starting on the monthly chart, I am anticipating bullish price action in the long term as price has traded into a discount bullish fair value gap of the monthly impulse. And this is now in that added confluence of the completion of that market maker sell model on the treasury bonds. Currently, I am looking at the monthly range high as a possible draw on liquidity, as we have tapped into internal range liquidity. And after we tap into internal range liquidity, I am looking for that external range liquidity. In this case would be that monthly high. Dropping down to the weekly chart, I understand that the previous week has displaced, and this aligned with my expectations of consolidation or expansion higher, as I would like to see a fair value gap form on the weekly to confirm this displacement. My original idea going into this week was that the market was going to consolidate in Q1 of November, and in Q2 of November manipulate into that BISI and trade into October high afterwards. In this slide, I have edited it so it would depict what I was imagining in my head that I thought price action was going to do. Is Q1 of November we consolidate here, and Q2 of November we manipulate into this bullish fair value gap and then trade higher into that October high. On the daily chart, my bullish bias was further supported when I didn't see a change in the state of delivery from the daily bearish order block I was looking at last week. This was a key level for me as my projection from last week ends here. This was the -4 standard deviation of my previous week objective, and if price didn't provide bearish evidence, I would have liked to see price prepare to go higher. Dissecting price further on the hourly chart, we can see that price in no way respected that daily bearish order block in a premium at previous week's -4 standard deviation projection and continued to trade higher. Over here, this -4 standard deviation from last week's projection higher, and this daily premium order block I was looking at and would have liked to see acceleration to the downside if this was respected. This led me to believe that price was to continue higher to complete the market maker buy model we were in, as stated from last week, as we were in the buy side of the curve now. In this slide, I zoomed into the hourly charts a little so my annotations are a little more visible. Entering this week, I would have liked to see a bearish impulse on Tuesday as manipulation, but instead we got a manipulation lower on Monday and created an impulse structure to the upside on Tuesday. So here we have that accumulation on Monday and then that impulse on Tuesday. I would have liked to see this go lower if we were bullish on the week, but I'll explain later why I thought that Friday was going to run this high. With projections of the manipulation responsible for the impulse higher, we can confirm that the weekly objective is in alignment with the hourly or 4-hour market maker buy model. Also, a moment of appreciation for how accurate standard deviations are when they are used correctly. What do we expect when price reaches -2, -2.5, and -4 standard deviation? Change in the state of delivery, and that's exactly what we got. So when we got to that -2, we had consolidation. When we got to that -2.5, we had retracement. And then from -4, that was our weekly objective. This part is pretty discretionary, but once I saw my weekly target projected, I looked for what were the possible targets after the market maker buy model was completed. So I checked the 4-hour and saw a 4-hour unicorn model that I thought would be perfect for smart money to sell above buy side liquidity. So here you can see that unicorn model on the 4-hour that aligns perfectly with my -4 standard deviation. And that's what I was expecting by the end of this week. Continuing on the hourly chart, once we took the buy side liquidity into -2.5 standard deviations on Thursday, I was looking for sells into that hourly unicorn created from Monday. This also aligns with my quarterly theory expectations, as I would have liked Wednesday to distribute lower. Since this never happened, I expected Thursday to reverse as X in the quarterly theory profile. So here on Monday, we had accumulation, Tuesday, manipulation. Wednesday, I was expecting that distribution lower, or retracement in this case, but we never got that. So on Thursday, when we manipulated over here into the -2.5, I was looking for that retracement, or in this case, accumulation, manipulation, distribution, supposedly, and X, which in this case would be the reversal profile. This is where I took a sell on ES as well, as there was an SMT divergence and a 5-minute unicorn for entry. I thought it was possible to drop lower, but after securing 2R this week, I was done and didn't want to risk any more capital on low probability conditions. On Friday, I was sidelined, but it was still cool to see price play out. When I got to my desk, I saw that Asia low was run out and created SMT divergence in the indices. This indicated to me that price was bullish, and since it was Friday, the market makers are out of time, and if my anticipated weekly objective was the market maker buy model completion, they had to run price there by the end of Friday. This would be that special function Trader Day talks about all the time. I don't know exactly what it is, but how I see it is that Friday is either TGIF setup, meaning it retraces back into the range by 20 to 30%, or it expands to that weekly objective. Further building onto this theory that TGIF was not an option, as price had already traded back into the weekly range on Thursday. This is where I hopped onto a demo account and tried to record a video of my unicorn model in action, but unfortunately price ran without me, but it happens, right? The unicorn model is something I wanted to showcase in a future lecture, and so this morning, since I wasn't trading, I wanted to record a video of it being executed in live time on NASDAQ. In this case, I didn't really get an execution because NASDAQ kind of just ran higher. But if you look at ES, there actually is a setup here in terms of my model where you have a breaker here, you have a fair value gap here, and then your stop loss would be below this order block. And then you would trade higher for a 2R trade. And in this case, it 100% would have hit. With bias in mind, you can target higher, but once again, I'll explain that in a future lecture. Last but not least, supporting my bullish bias for Friday, on the daily, I saw that price had filled a BISI, or a bullish fair value gap, on NQ. And once internal range liquidity has been tapped into, what do we look for? We look for external range liquidity. And I thought it was too perfect how Thursday engineered that essentially equal highs or that run higher. So that's pretty much my study or my weekly review for NQ this week. And going into next week, that's when we get the true month open. And I would expect some sort of bearishness, especially because we have so many imbalances on the downside on the higher time frames. Especially on that weekly now, we have that bullish fair value gap created. And on the daily, you can see so many imbalances here. And I also see this breaker right here I'm looking at, and this fair value gap specifically, because this would be the unicorn model on a daily scale. So that brings me to the conclusion of this weekly review and why I was bullish this week in terms of study. This week was incredibly accurate in terms of algorithmic theory and definitely an eye opener. As always, let me know if you have additional insight on my analysis. I hope you all enjoyed this weekly review and have a great day.